Hello and welcome to the Stock Planner channel. We're an education channel sharing our ideas, swing trading, and trying to win. This is a picture of my Chinese apartment in Kunming, China. It's a high-rise built several years ago. It actually belonged to my wife, who was a doctor in China, an eye surgeon, and I inherited it through marriage. We haven't used the apartment. I think it's on the 5th floor. 1, 2, 3, 4, 5, somewhere in this area here. The common areas of the apartment complex, and the balcony which we have enclosed. Very nice sitting in the morning. And this is a street entering. There's not a lot of parking, by the way. Parking comes extra. When you buy an apartment, you get about a foot of land in the common area, 1 foot, and you don't get any parking space, so you have to pay extra for that. Anyway, I want to talk about the housing collapse and why I think the economy of China is in trouble. Why my wife is worried about her money in China, and what am I going to do about it? I'm going to invest and short an ETF called FXI, which is a China ETF, a basket full of stocks, large caps stocks, that I think for the short term is going to go down. Let's get started, but before we do, remember to do your own due diligence. You're responsible for your trades. Trading is risky. Today I'm interested in trading China. My wife's China, and we're always talking about the economy. She owns some homes over there, some rental property. So she's very interested in the housing market, and she's very interested in the dollar, and she has money in her bank account over there. She was a doctor, and she worries about that money not being worth as much as when she put it in. So we look at Chinese economy many times, and looking at this website, China's economic crisis is about to get much worse. Housing collapse explained, and he does a very good job of explaining. This is new money, and the YouTuber has a very clear explanation and had produced a good video of how he views the collapse of China's economy and the housing market. And one of the things he says is that people move from the countryside to the city, and as long as that movement to the city continued, there was a need for more and more houses. And my wife explained to me that when you buy an apartment or a house in China, you prepay. You start paying the mortgage before it's even built. And what the builders do is they use that money to build the building, and oftentimes pay for the building they had just built. So if there's nobody new coming into the city, or it's slowed down, it's sort of like a pyramid scheme where if there's nobody coming in, the builders can't build the existing ones, and they can't pay off the ones they had built. So if the housing market does collapse, it's going to cause a lot of problems for the banks in the country. And here's a little statement he makes. When the economy is good with continuous expansion, most of the properties can be delivered. But when it's not good, that's when you have problems, and the pyramid scheme begins to collapse. Before we continue on, this is the YouTuber. This is his site. Subscribe to it and watch this kind of video and many other ones. He has produced a lot of good videos. Now we're looking at FXI, which is an ETF, which is a basket full of stocks. Baidu, Alibaba, NIO, which is their electric car that they think is going to compete with Telsa. And we're looking at the weekly time frame, which each one of these bars is a week worth of data. And you can see that from 2021, China has been going and trending down. Now there seems to be some kind of level of support here, and some people will believe that the price should bounce off support, maybe go back in the other direction. But what would cause it to go back up? The world and the global economy is facing inflation. I believe that we're going to go into a recession. China depends on exports. If we're not going to buy as much stuff, that's not going to hurt their economy as well. China has some political issues. They have the COVID zero policy, which means basically if somebody gets it in a city, they shut the city down. They need to open their economy up again. As I said, my wife's a doctor. She would like to go back for 2 or 3 months, use her apartment, and make some money. Because Chinese immigrants, contrary to what you read in the newspaper, Chinese immigrants that are professional cannot work here unless they go back to college. My wife would have to go back to college for 6 more years. She's older, and so that's not feasible. So the only ones that can work here are illegals under the table and mainly unskilled workers. So she's forced to go back to China. So I don't think there's much reason for it to go up long term. And let's just think about this for 3 months out. Is it going down in 3 months time? Or is it going to go down in this area here into 23, 24? Or is it going back up to where it was before, the 40? Down or up? I think we have some downside. Now, I use some other indicators. This is a zigzag indicator. It's perfect. Okay, right now, the zigzag doesn't know what it's doing, and this thing is just flopping around. The reason why it's perfect is it waits for a sure thing, future data, and then repaints itself. But I use it to find other indicators, and I use the MACD, the stochastic RSI, and the RSI. And when the RSI is in its overbought condition, that's the time I look for a short. Likewise, when the stochastic comes around, I'm sorry about writing that, and then when the MACD is above the 0, which it is now, I look for a short. And when they all occur, and it looks like they did in this area here, at the same time, that's a little straighter line, but it doesn't have to be accurate. Okay, that's the time it predicts a short, and that would have been a nice short and made some money. Likewise, the RSI is in the overbought condition here. The stochastic is above the 80 in its overbought condition and come back around. You wait till it comes back around, and when the MACD is above the 0 line, we can take a short when they all occur at the same time. So that looks like about that time right there, and maybe around there. And there's nothing to say it's going back up. We would wait for the RSI to go below the 30 and come back around below the 30, and it has not done that. The stochastics to go below the 20 and come back around, it has not done that yet. And we want this to be below the 0 to take a long, and it's not. So I think we have some more short for a little while longer. Let's take a look and see what the expected move of this stock is. Going to a free tool called Option AI and looking at the expected move, we see expected to move in the next month by almost 7%. So that's a pretty quick move. In the next 3 months, it's going to move about 10%, rounded up. Now, the only thing about expected move is you don't know which direction it's going. Expected move is how much the market expected this stock is going to move in the next time frame, and they price that in their option spread. So the market is expecting to move around nearly 10% in 3 months. That's a decent move, and that's a pretty quick move in a month. But what direction? So taking that 10% and putting it in a spreadsheet, a 10% move in the next 90 days, which would be a 31.17 high strike price. I guess it's going to be right in here somewhere. And the low strike price is 25, somewhere in here. So the market is expecting to move around $2.70, $3. And indicators, there's nothing's changed. We think it's going to go down based on indicators and based on the fundamental analysis we've done and the analysis that YouTuber done. So if you take $1,000 and bought stock in 3 months, you'd have $100, which is about a 10% move, of course, and that would be a 38%, 39% APR. That's decent. And of course, you could use options and option spreads, a bear call, a broken wing butterfly, calendar spread, and do maybe a little better than this for less money. But let's leave it go and say our overall strategy is for a continuation of a downward slide and to place a trade or a bet for that downward slide to continue, at least for the next couple months. So what do you think of this trade? Are you betting up or are you betting down? Please leave a comment below. My settings that I use regularly for TradingView are in the description below. I'd like you to subscribe and like this video. Helps me out, allows me to make more videos. I remind you to do your own diligence and make those comments, because when you engage and share your ideas and comments, that is a quicker way to learn and get peer review and feedback. My trading has gotten better since I've been doing these videos. I've slowed down my trades, thought them out a little better, and that peer review has helped. Like what you're doing, and we'll catch you on the flip. Make a comment, please.